Hi, I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. Well, here we are, Christmas Eve, a holiday shortened day for trading. Volatility very mixed today with people squaring positions, worried about the fiscal cliff, etc. Let's start with the equity market. Right now, the S&P 500 closing below, near below that important 1430 area. That's the pre-election high we've seen. With that, we're seeing the VIX up about 4%. We're seeing implied volatility in the S&P 500 up about 0.5%, 3-month at the money implied, and we are seeing a continued spike in correlations. Moving on to foreign currency, that's really been a mixed bag. Risk currencies are higher against the US dollar, and I'm sorry, I got to start over. Hi, this is Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. Well, we have a holiday shortened day with Christmas Eve upon us. Volatilities are really mixed given that the fiscal cliff still has not been concluded. Traders are squaring positions and fearing the worst right now. S&P 500 with an hour to go in the day, down about 6 points below that very important 1430 support level. With that, we're seeing back-to-back gains in the VIX, up 4% today. That translates into about 0.5% up, 3-month at the money implied volatility. It's also important to note that we're seeing term structure flatten out just a little bit, skew actually unchanged. Moving on to foreign currencies, that's been a mixed bag. We're seeing European currencies higher against the US dollar. We're seeing risk currencies down against the dollar. So really just a mixed bag. But with that, if you take every volatility in aggregate, we're seeing volatility up about 0.5 to 3/4 of a point, 3-month at the money implied volatility for the FX sector at the CME Group. Moving on to oil, oil down about 19 cents on the day, continuing a little bit of a downward trend. Volatility down about a full point, 3-month at the money implied volatility. We're seeing some upward pressure in term structure as first 1 through 3-month terms are deflating quite a bit right now given the holiday shortened session. Gold up very slightly. Keep in mind gold has had just a ferocious volatile range the last couple of trading days. Right now up about $1.90 on the day. With that, volatility down a full percent. Do keep in mind gold vol was up quite largely last week, just about every day, and that's also true with gold and to a lesser effect silver. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago.